Hello, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder, CEO, and lead broker associate here for the Zia Group with eXp Realty on the Central Coast of California. We cover all of Santa Barbara, Montecito, and really actually all of Santa Barbara County and Ventura County. We've got realtor partners that have expertise and specialty in all of those different locations. So if you do have anyone that you know that's looking to buy a home, sell a home, or invest in real estate anywhere in Santa Barbara or Ventura counties, please let us know. Now today I'm here to deliver our monthly real estate market update specifically for South Santa Barbara County. This is our July 2025 market update, and we're going to be going over the statistics that are through the end of June. So we've had an interesting year this year. There's been a lot of people holding their breaths about what's going to happen. On the interest rate side of things, we've got the Trump administration making some big moves in the economy. Politics outside of the statement, it's definitely one giant grand experiment, and there's definitely some uncertainty with how things could affect the real estate market, with capital gains tax, being proposed to disappear, with pressure on the Fed to decrease interest rates in the coming months up to 2%. The reality is the Fed just made the decision to keep interest rates, the Fed rate, steady for the fifth time in 2025. So there's still some kind of pressure against there. There is going to be a new chairman put into the Fed later in 2026. So we'll see if that changes the Fed's overall stance and policy, and if there is some downward pressure on that Fed rate that over time does have some positive effect on interest rates in the home market. Now, what's happening in our real estate market, we've got those, the typical kind of home loan interest rates kind of vacillating right now between 6.7 and 6.9%. So we're still in that high 6 kind of percent interest rate environment. That's just kind of been where we've been for months and months and months now. The absorption rate, which is the amount of inventory there is compared to the pace of sales on the market, has been ticking up slightly both on the affordable market and on the luxury market. So we're about 3.75 months of inventory on the affordable market, and on the luxury market, we're a little bit over 7 months of inventory. Now, historically, we don't see a balanced real estate market with complete equal buyer and seller kind of negotiation, kind of leverage until generally about 6 months on the affordable side and, 9, 10, 11 months of inventory on the luxury side. So the absorption rate is communicating we're still in a seller's market. I would say it's really kind of property specific and inventory segment specific, whether or not the seller has a little bit more leverage now or the buyer has a little bit more leverage now. So I would say it feels a little bit more like a balanced market with a slight maybe preference towards the seller. On the luxury side, I'd say the seller still has a little bit more leverage. We've seen a lot more luxury sales this year in relation to what we see typically compared to the affordable market, and a lot of that has been fueled by what we're terming the fire migration, from those LA fires, the Palisades fires. There were a number of buyers that were infused into our market, especially on the luxury side of things, which made for a much stronger luxury sales year this year than I think the market or economy would have seen without that event. Sales prices are still strong. Our median sales price is up about 13% year to date compared to 2024. Now, if you've got a home under $3 million, I would not tell you that your home went up 13%. It didn't appreciate that much. We're not seeing that. The affordable market, frankly, has looked pretty flat on prices the last 12 months. The luxury market, again, has been infused with some of these sales that weren't going to be in the market otherwise, and I think that's created some of that upward pressure on the luxury side of the market, which is drawing all of that median and average sales price up, even though the affordable market, we've actually seen some examples of properties selling less than they did a couple of years ago, but it's really property specific. Some selling more, some selling less. Average sold price is up about 5%. So each of those statistics give us a window into what the appreciation rate has been, but neither one is the true appreciation rate. It depends more on the segment of the market. We're still past the 2021 peak in prices. So if you look at those statistics, they are going to show a definite that we are at kind of a peak price that we've seen historically. The luxury market, as I mentioned, is still driving most of this high sales activity. We saw 15 sales over $5 million in June. I mean, just a few years ago, we might have seen a third of that number in some of the months. So we're still seeing great luxury sales activity, even though that fire migration has tapered off a little bit in volume and intensity and kind of short-term catalytic motivation. We're still seeing some of that migration, but it's just a little bit more tapered now. Average time to sell a luxury home is coming in right around 3 months. And pricing as far as area, if you look at like Montecito and Hope Ranch, the median price is up 13.2% year over year. So again, that's kind of drawing the market statistics up. And then if you exclude those luxury areas of Hope Ranch and Montecito, you're actually only up on paper 3.2% year over year. And so that's why I'm saying it feels a little bit more like a level market versus a true appreciating market. Our current average price is hovering around 3.6 million. The median sales price is in that $2.5 million range there. As far as market velocity outside of the luxury market, those luxury estates are taking more like 3 months to sell. If you look at the market as a whole, it's about 7 weeks. So you can think about, okay, if it takes 3 months, for a luxury home to sell, maybe if you exclude that segment of the market, if the average is 7 weeks, okay, maybe we're looking at more like a, 30, 35 days for kind of your average affordable home. And then that's balancing out into that 7-week statistic altogether. As far as what we're seeing in negotiation, it's all over the place. For the properties that are priced well, a lot of those, I would say maybe a third of those are still getting multiple offers and good sales experiences and sales outcomes. The properties that are priced even a little bit above where they should be, not as aggressively or kind of stretching up into just a slightly higher price range, even sometimes 2, 3, 4% higher on the asking price can make a world of difference on how the market responds. Whether or not you get 2 or 3 offers or you get no offers and have to chase those buyers back 2 months later. As a market statistic overall, we're seeing that sales the sales price is about 4% below the last asking price and about 9% below the original asking price. Now that's skewed because in Montecito you're going to see kind of steeper adjustments there versus the kind of more affordable side of the market. But bottom line is, if the property's been on the market for 3 or 4 weeks, you should probably see some good movement, and don't be afraid to ask if you're a buyer. If the property is newly on the market, don't be surprised if you're competing with a couple other buyers if the property is priced well. Active listings are still up year over year, about 24%. When we have more homes to sell, it generally means that we're selling more homes. So we've seen both the number of sales go up this year and the amount of inventory, but inventory is slightly outpacing that increased number of sales. The good news, if you're a buyer, it means that you just have more selection, and a lot of buyers have been so excited for that selection, and they're finding homes that they finally like, and they're moving forward, which is exciting. Let's see. Buyer demand, as mentioned on the luxury side, is continuing to be fairly strong, maybe tapering off slightly with that migration. As far as what we're seeing in Montecito specifically, homes and estates are selling 7% on average below their last listing price and 16% below their original listing price. Now that statistic sounds like a lot, but you got to keep in mind, and especially in the ultra kind of high net worth, ultra luxury market, if you've got homes above $15 million, $10 million, some of those might come on, at 18 and eventually sell for 13 or something. So you can see some pretty big movement on some of those luxury properties. And that difference actually, as you goes up in price, especially above 20 million, you might see in some cases, a third off of the original asking price as sellers are exploring where the market is and at some point come down into a more kind of reasonable range there. So high-end sale, the top one was 1803 for Fresnel Point. There is always popularity to buy and demand to buy a home on the beach, and Fresnel Point's a great location. That closed at a little under 24 million, and then the highest condo sale was a Bonnie Mead condo, and that closed at 7.5, coming in, bringing in the median luxury price right about 7 million. So there you have it. Condos are kind of just steady Eddie. Condos are selling definitely closer to the asking price, only 2% off. Selling fairly quickly, about 5 weeks on the market. Pretty similar to 2024, maybe a little bit quicker. And we are seeing some more sales activity compared to last year, and some appreciation on pricing overall there. So overall, balanced market. We expect to see that in the coming months. I think the only major change that I would expect is if one of these big moves that Trump is kind of pushing for, either capital gains tax gets removed, or interest rates do come down dramatically. Those would be the two main factors that I would think would change our market significantly. Otherwise, I'm expecting just more of the same kind of steady market here as we go through the summer and into the fall. If you have any questions, real estate is hyper local and specific in context, so please do reach out. We're happy to have a private consultation with you and give you some more kind of in-depth analysis on your specific situation and see how we can help. Thanks, friends.